Hello guys, welcome back to the channel. In today's video, I'm going to be talking you through how I invest alongside one of BlackRock's highest paid employees, one of their highest paid investment managers. And as the title suggests, he's one of BlackRock's hedge fund stars. He manages their sort of systematic equity team. There's a publicly available fund that people like myself and people like yourself can invest into. And that's what we're going to be talking about today. So yeah, I've got a number of sort of different topics I want to cover off. I want to talk about the manager, the sort of the background of how this fund came about, and then talk you through some of the biggest holdings in the fund, because I think that'll be quite interesting and give you a sense of why exactly I hold it in my own portfolio. And for those of you that have seen the ISA stocks and shares series, you'll see that it's sort of got, I think it's 25-30% weighting in that portfolio, and I recently added into it on recent market weakness. So it's quite a good time to cover off the fund. And with that said, let's dive into the fund and why exactly I'm invested into it. But before we do jump into the fund itself and my investment reasoning behind it, I do want to make it clear that the standard YouTuber and standard online disclaimer does apply. This is not financial advice. This is just my personal reasoning for investing in the fund. I've done my own research. This is purely for education and sort of entertainment purposes, this video. So please do your own research and see if this fund or any other investment is applicable to you, to yourself and your circumstances moving forward. But with that said, I'll jump over to the laptop screen in front of me, share some things for you guys on screen as I do that. And yeah, let's dive in. So introducing the fund then. It's called BlackRock Global Unconstrained Equity, and it's managed by a person called Alistair Hibbett. So just to set the scene, in 2020, and I'll pull up not a cool report, just a factual report from around that time. In 2020, when markets sort of went haywire after COVID and sort of shot off to the moon, Alistair Hibbett was reported to earn, I think, 4 or 5 times more than the CEO of BlackRock. And I think he got a bonus of over $100 million. So this is sort of a man who knows what he's talking about when it comes to equity. He's managed their hedge fund business, or an arm of their hedge fund business, the strategic equity arm of BlackRock's business for quite some time now. Not sure exactly how long, but it's been a while, and he's pumped out some really good numbers. And I think this fund actually launched in 2020, so after all this performance, or alongside this great performance, BlackRock thought this is a great opportunity to sell it to people like me, people like you, and sort of wealth managers across the country, so financial advisors, that sort of thing. They came up with this fund, BlackRock Global Unconstrained Equity, and it's quite an interesting one. It's unlike a lot of probably what you'll see out there on Hargreaves or AJ Bell, or I don't think Trading 212 do funds, but if they did do funds, it'd be very different to what you see on there. And it's effectively sort of a highly concentrated portfolio of what their team believes to be the highest quality businesses in the world. And just to be clear, BlackRock is not paying me to say this. I'm not sponsored by BlackRock or anyone else. It's just a fund that I've come across and I'm quite interested in, and it's something I invest in personally. So talking it through with you guys and explaining my reasoning may help you in understanding your own investments, or understand how sort of an investment professional thinks about how they go about investing in different funds. And what I've got on the screen, you should be able to see it now, is just a brief snapshot of Alistair Hibbett's career. I'm not going to read out all of it, but I thought some of it was quite interesting. So, he's personally managed over $15 billion in a strategy called the European Dynamic Fund. He's a platinum winner of the Portfolio Advisor Fund Awards on multiple occasions, and he won Lipper Europe awards for 10 consecutive years. I'm not actually sure what that is, but he's winning awards in finance, so that's probably a good time. He was admitted to the FE Alpha Manager Hall of Fame in 2019. Ooh, exciting, I know. He's had a long history of investing, and his track record speaks for itself. So with the manager covered off, at least somewhat covered off, I wanted to move on to TrustNet, where we can have a look at the fund in more depth. We can have a look at the recent numbers and why maybe might be a good time to buy in, and why I recently bought in on my recent ISA stocks and shares series. I can talk through the top 10. I've got some notes down on why the stocks I think are quite interesting at the moment. Talk about the costs and the fund size under management, and yeah, just go from there. So here we are on TrustNet. As you can see, BlackRock Global Unconstrained Equity is the fund name. 4 out of 5 crowns, which is like a rating on TrustNet, and an alpha manager, which basically means FE Fund Info have decided that over time, Alistair Hibbett outperforms the market. And we'll just do this page in order, so just scroll down and we can touch on things as and when we come to them. Recent performance has been brutal, to say the least. You can see over the 5-year time horizon, so this is since the COVID crash, pretty much to the day almost. it's had very strong performance, completely outperformed the IA Global Investment Sector, so Investment Association Global Equities. It's completely trounced it by over 20%. But in recent times, it's been hit pretty hard. And if anyone watching this video has watched my previous video on what's happening in markets, a lot of this is to do with Trump and uncertainty and all that stuff, and that will impact quickly growing equities the hardest. And this portfolio is full of rapidly growing equities, hence it's grown faster over the 5-year time horizon, but also hence the recent twice the downside capture of the wider global sector. Now, scrolling down a bit further, you can see, as I mentioned originally, Alistair Hibbert is the main manager and has been since the launch of the fund in the early 2020. And then this is, part of his team, Michael Constantis, who I'm sure plays a very important role, but he isn't the sort of the main drive behind this fund and why I'm particularly interested in it. Although I'm sure that he does contribute massively. And here you've got some financial information ratios, which could be interesting. I mean, fourth means bad. So over 1 year, given the recent performance, it's fourth quartile, which means out of all of the funds, it will be in the bottom 25%. High volatility, low alpha, which means poor stock picking over the last year. High beta, which means high risk relative to the market. And yet, let's just not get into it. But effectively, 1 year has been quite poor performance numbers. If you want to find out more about these and what they mean, just do a quick Google search and you'll find them relatively quickly. And if you have any questions in the comments, let me know and I'll be happy to clear those up. But over 3 year, the numbers are more attractive, and over 5 year, it would be the exact same story. Scrolling down a bit further, you can see they currently manage 1.5 billion in this strategy. Now, this number will actually be a lot larger because they've got the hedge fund business, and they'll probably have some specific accounts that aren't linked to the main fund, so that number's boosted up. But when it's highly liquid large caps that they choose to invest in, that's not a problem whatsoever. And the OCF, which is effectively the fund charge, anyone who's been invested passively will think that's a typo probably, and it should say 9 basis points as opposed to 90, but that is indeed the cost. And it's a somewhat expensive fund for a large cap global equity, but you're paying for the team and you're paying for BlackRock's resource. So in my opinion, over the long term, that's a decent sort of trade-off. I'm more than willing to pay for it. Some people will, some people won't, but that's the charge and that's what it is. And then finally we come down to the top holdings, and I've got some quite interesting slides to show you guys as I talk through these. I've picked out a couple of them and I've got some notes here that I just want to run through and basically talk through the different holdings, why they're probably in the top 10. I'm not privy to their research, but I can take a good guess based on what I know, and maybe it'll be provide you guys with some ideas or some understanding about the investments themselves. So starting off then with Microsoft, it is the fund's biggest holding at 9.11% as of the 1st of January. I don't think it takes much introduction. Everyone pretty much uses Word, Excel, all that good stuff. It's a standard massive revenue, massive cash flow generator for Microsoft. They've obviously got Xbox, they've got all these subsidiaries. God, that word's hard to say. Subsidiaries, there we go. But the big driver there behind the growth is AI. So the Copilot stuff, the cloud computing, where they're competing with AWS, which is Amazon's effectively their cloud operator. And it's got a massive cash balance sheet. It can pretty much, I spoke about this in my technology stocks video, when you get to a certain size, you get a certain moat and it becomes very hard to compete with you. That's Microsoft. That's why they're such a dominant business and will probably continue to be so, and that's what BlackRock are seeing for the next 5-10 years. Next one, ASML. Those of you that are pretty interested in stocks will probably know what this is. If not, it might be a new name to you. Effectively, ASML have a monopoly on a certain component of the chip making for the likes of NVIDIA. The highest end chips require ASML in their supply chain. So, you don't get iPhones, for example, without ASML. You don't get high-tech, high-spec cars. You don't get Teslas without ASML. You don't get PCs without ASML. So they are integral to the AI supply chain, the technology supply chain, and they've effectively got a monopoly on the certain type of chip making that they do. Not to get too technical, but please feel free to read that in your free time if you'd like. And again, it's all about, with this fund, a lot of it is about consistent, predictable cash flows over 5 to 10 years. And with a monopoly like ASML and to some extent Microsoft and a couple of others in here, you do have that predictability unless regulators come in and smash it down, which they're probably not going to do, because especially in the West, competing with China on the tech front, it's a pretty attractive proposition. So that's ASML, that's Microsoft. I come on now to Novo Nordisk, which is a bit different. So you can see Novo Nordisk has a 6.0% weighting in the fund as of January. It's one of the biggest healthcare companies in the world. And the reason I would imagine BlackRock really like this stock is because of their diabetes and weight loss drugs. They're called GLP-1s. Now, as far as I'm aware, I think the GLP-1 market, especially in the US, has penetrated like 3 to 5 to 10%. I don't know the exact number. I think it might be 3 to 5% of the potential customer base thus far. So I think over 3 or 4 years. And over the next 10 years, it's supposed to multiply by 10, the potential market size. And Novo Nordisk, I believe, have a patent until the early 2030s. So they can pretty much, it's a duopoly at the moment. So Novo Nordisk and a company called Eli Lilly dominate that market. They're the only two real players. Competition will come in, but at the moment it's just those two players and they have their patents in place. So the other thing with Novo, actually, quickly before I move on, is it's far more attractively priced than Eli Lilly. So you've got two ways to play the GLP-1 trade, Eli Lilly or Novo. Novo's way cheaper. That's probably why BlackRock's gone into it. Finally, we come on to Visa and MasterCard, which I wanted to sort of take in one. Pretty much every bank card you use will use, or every let me spit this out. The vast majority of transactions that occur, especially in the West, use Visa or MasterCard. They have, again, a duopoly, and I've just noticed that's a theme in the portfolio. When you have significant market share and you can sort of dictate your pricing and you can limit the competition, your cash flows become predictable, and as long as you don't take the mick, increase your prices by double or triple or whatever, the regulator is pretty much going to leave you off. And especially with Trump now in, you'd expect these US powerhouses to be left alone. And yeah, I mean, if you expect card payments to continue to occur, then Visa and MasterCard are pretty good plays, and that's again what BlackRock are seeing. They are quite expensive names, but that's just the premium you pay when you've got such strong businesses with such strong balance sheets, cash flows, and incomes. So that's that. I mean, there's not really much more to cover off. I've covered off the stocks I wanted to. The fund itself, hopefully you've got a great overview now, and it's something to consider. So with that said, please leave a like, subscribe if you're new, and I'll catch you in the next video.